Hey, it's Omar Michel. Last week we spoke about income, the different types of income and how you qualify. This week we are talking about assets. So number one, do not move money around. Anytime you move money from one account to the other, we must have a paper trail. We need a bank statement where the money came out and a bank statement where the money came in, 2 from each account. To avoid that, don't move money around. Number two, there's a term called large deposits. Any deposit into your account outside of your regular payroll or perhaps a IRS refund, we have to know where it came from. We're gonna think the worst. It could be dirty money, it could be borrowed money. Borrowed money comes with a payment. A payment goes into your DTI, which we talked about last week. Number three, gift money. If family is gonna provide assistance to purchase this home in the form of a gift, don't move money into your account. It's that important. Instead, talk to your loan officer about the best way of moving that money. Usually the best way is to get your family member to wire the money from their account directly into the escrow account. Moving on to the different types of assets, where is your money located? Is it in a checking account? Is it in a savings account, a CD, a money market, a 401k, a 403b, a KFC, a CNN, whatever it is? We need to know where it is and your accessibility to it. Perhaps you don't have a whole lot of liquid money, but you're about to sell a home and the proceeds will be used for the purchase. That also is considered a form of assets. Also, how much money are we talking about? Are we talking about 5%, 10%, 20% down? 20% down of what? Percentages are moving targets. So when somebody asks you, how much money do you have to put down? Don't say 20%, don't say 10%. 10% of what? You give them a dollar amount and you provide proof with the bank statements, the investment statements, etc. And lastly, when you provide the bank statements, what do we look at? We look at your account numbers, make sure they're consistent. We look at the dates, make sure that they're 2 consecutive months. We look at the large deposits, which we already talked about. We also look at the addresses on the bank account. Whose address is it? Who lives there? Do you live there? Do you live with somebody else? Is it a mailing address? Do you own that property? Do you not? All of these questions go into the analysis of a bank statement. Furthermore, who else is on the account? Is it your mom, your girlfriend, your brother, your sister, your uncle, your neighbor, your dog? Whomever it is, we need to know that they give you access to that account as well. So there's a brief overview of how we analyze assets with bank statements, investment statements, proceeds from real estate, etc. Next week, we will be talking about credit, credit scores, types of credit, and how we analyze that in your pre-approval. My name is Omar Michel, and I'm here to get you home.